Welcome to Roadmap to Wealth. My name is Carlos McWhorter, CPA, and my goal is to help you become an informed and successful investor. So maybe you've been investing for a while, or maybe you're brand new to investing and you're just not sure what you're doing. You need some direction. You need to understand what is a good investment versus a bad investment. When is a good time to buy versus when is a good time to sell. This is the goal of my channel, to help you understand these things and to make them as simple as possible. We assume investing is very complicated, but in all of my education and certification and my experience, the most profound thing that I've learned about investing is just how simple it really is. So my goal is to uncomplicate all the things that appear to be complicated and to help you understand how to invest successfully. Now, just a disclaimer, I focus on long-term investing. I don't really focus on short-term trading, charts. I typically stick to the fundamentals, as I've learned that is the best way to understand an investment. When you buy a stock, you have to understand that there is an underlying business that exists that stock represents ownership in. You have to understand the business to understand whether it's a good investment or not. You also have to understand the industry and the position of the business compared to its competitors to know if it's a good investment. So I believe there are 6 factors that identify a quality company. So the goal is to identify quality companies and to make sure that we buy those companies at a fair price or underpriced. Now, many value investors will try to explain to you that it's better to buy a stock that is undervalued, and that may be true, but sometimes value investing is overhyped. Sometimes buying a quality stock and not overpaying for that stock ensures that you'll have some solid gains in the future. So let's talk about the first sign of a quality investment. We're going to focus on the revenues for the first factor. Now, again, I'm going to make this really simple. So when you're investing, the main objective is to grow your money, right? You invest in a stock, you expect that stock to grow or that business to grow, and subsequently the value of your stock to grow. So if that's the goal, then we're going to focus on companies that are actually growing. Yes, there are companies that may be declining or that may be flat, that may be good investments, but why take the risk when there are thousands of companies out there that are growing their revenues year over year? So we're going to focus on those companies. So the second thing about revenues is we're going to identify the growth state of the revenues, right? We're not just going to look at a company that's growing their revenues. We're going to identify whether it is a low, medium, or high growth state of companies. So a low growth state is a company that is growing anywhere from 0 to 10%. And the idea behind this is the market averages 10% per year. So if a business is growing at 10%, it's basically keeping up with the market. So we're not going to consider that special type of growth. So that will be a low growth company. Then we're looking at medium growth companies. Those companies are growing anywhere from 10 to 20%. And then of course, high growth companies. Any company that is growing their revenues 20% or more, we consider high growth. So when we're looking at a company, we identify low, medium, or high growth. And even companies that are declining will effectively put those companies in a declining revenue category. Then we look at the revenue mix of the company. A lot of these companies have revenue sources that are coming from different places. For instance, if we're looking at Apple, we can't just assume that their revenue sources is coming from one place. They have the iPhones, the Mac, they have the iPad, they have wearables, and they also have the services. So a company like Apple has 5 main revenue streams. We need to understand which revenue streams are the more dominant, which ones are growing the most. That way we can see where the company is versus where the company is going as far as the revenue stream.